All right. Here we are with Jaime Rogozinski, the founder of WallStreetBets, the famous subreddit that brought hedge funds to their knees earlier this year. And Jaime is now starting a crypto fund and token, which we'll get into this interview, of course. Jaime, it's great to have you on the Defiant podcast. Thank you for joining me.
Yes, thank you very much. It's a pleasure to be here.
Awesome. So before we get into your new crypto projects and endeavors, I'm just super curious to hear about how Wall Street Bets, the subreddit, was initially created. Like, what was the idea behind it? And kind of what was your background that led you to start that group?
So I started Wall Street Bets in 2012. Right. At the time, I was really looking for a place to take my extra residual, my expendable, what's the word? I was making money that I wasn't spending, disposable income. Thank you. And so I was looking for higher risk, higher return type investments or trades or gambles or whatever we want to put it. And, I did have my traditional Roth IRA retirement plan, but I also wanted to see if I could accelerate that at all. And so then I started looking online, looking for places to talk about these higher risks, and I couldn't find them. So I just created Wall Street Bets.
And were you a full-time investor or was your full-time job something completely different?
No, I was a complete novice. Like I knew what the stocks were and I understood the concept behind them, and I'd already dabbled in them a little bit, back in the day when I first bought stocks in the early 2000s, it was super expensive. I had to go through my bank and pay like $30 to buy and then $30 to sell. And it was just a real laborious effort. Right. But I am a really hands-on learner. So I figured, all right, well, I see a lot of people talking about the stock market. The stocks had just finished their crash from 2008, 2009. And I couldn't help myself but thinking, well, that would have been a really good time to buy. And they're going back up right now. Why not get involved with this and figure it out? So no, I was really looking to learn, and I was hoping to find other people that were willing to be in my shoes and learn with me, and people that were willing to come and teach. So I had been in the finance at the time. I was working at the Inter-American Development Bank, working in risk management of all things.
Ironic.
So, I had experience in finance, but I came to learn that things that you learn in finance in school or at a bank or whatever doesn't really have anything to do with the stock market. Like it can, right? If you want to go in and do a fundamental valuation of the company and then compare the book value to the fair value, you want to do all these math things, you can. But you're also able to just look at a chart or find a stock that you like and just buy it. It's as much or as little as you want to put into it. You have these crazy fluctuations that happen in the stock market, sometimes for no reason, sometimes for an irrelevant reason, sometimes for a relevant but indirect reason. And it has nothing to do with this company's discounted cash flow analysis, right? It has to do with a tweet from Donald Trump. So that's when you start realizing that formal experience in finance doesn't have to be relevant in the stock market.
And isn't it also a bit about just having fun and just gambling? Some of it is just that, right? Because if you want it to be 100% rational, I think the recommended route is to put your money in an ETF with an exposure to the S&P or a few other index funds and just buy and hold. There's so much evidence that points to stock pickers rarely beat the overall market. But I think all of the thousands of people who are trading on millions of people trading on Robinhood and are joining these subreddits, they're looking to just have fun and be a part of a community, right? There's something else besides just purely investing.
Yeah, I've learned that it's kind of in the eye of the beholder. It's do what you want with it. And you have people that do want to gamble with it, don't mind losing it all, doing it all on a YOLO. We now have people that don't even care to make money with this, right? You have a number of people that were like activists with this GameStop or whatever and some of these other ones where they say, I'm not effing selling. I don't care if I lose money, right? Like, so it's the entire spectrum, starting from the I don't want to make money to I want to be crazy gambling to I want to be traditional investor. All those, that entire spectrum applies to this. And it can be gambling. All the tools are there to do it. The markets are open 5 days a week, or in some cases 6 days a week. You have all these leveraged derivatives that you can use to try and make it more exciting, right? So you could take a few $100s and turn it into tens of thousands of dollars. It happens frequently on WallStreetBets. More often, people that try that end up losing it all, but it's kind of part of the game. Or they can be a little bit more traditional. But the cool thing about it is, let's say that you buy a stock, like a share of Apple, because whatever are those reasons, either you're gambling or you're investing in it because you believe in it and you have all the phones or whatever, but you don't know about the stocks, right? Those people that now own a share have an incentive to go in and read about, well, hey, why did the stocks go down, right? Like a couple of days ago, the stocks all went down, and everyone, if I bought my Apple share, it's like, why did it go down? Apple didn't announce any bad news. Oh, the entire stock market went down. Why is that? Oh, this bond thing. What is a bond? The yields went up. What's a yield, right? Oh, monetary policy. Like, oh, the U.S. dollar. Oh, okay. What happened? All of a sudden, they understand what the Federal Reserve is doing with the interest rates, and that's what's affecting the stock market. That's cool, right? Mm-hmm. Whether you were gambling or whether you were investing, now you had the incentive to go. And I see that happens a lot, and it happens really frequently. You can start off with a meme and end up reading about monetary policy.
That's so interesting. Yeah, it is a vehicle and an incentive to have people make their way into understanding finance and macroeconomics at a deeper level than they ever had the interest to get into before.
And in many cases, they can kind of supersede or get ahead of what the actual macro tendencies. Economists have this issue where, like, and I'm one, by the way, I studied economics, so I am self-criticizing here. The economists are very reactive, right? It's like something happened. Why did it happen? They do analysis and like, oh, it happened because of that. Well, that never happened before, but let's add that to our math formulas for the future. Then something new happens, right? And they're like, well, that's never happened. So they just react to these things. These meme investors kind of get ahead of it, right? They'll go out and joke about how, well, stocks only go up, right? And they'll make memes about it and jokes, and academics will get all mad. No, they don't always go up. You should see what happened in the .com crash or in the Great Depression or 1987. Yeah, but it went back up. Yeah, they went down for a little bit, right? But they went back up, and they've been going up since they were created. So, this concept of simplifying some of these macro concepts, and they can say, well, it's because the printing fed and the thing. Yeah, but the stocks are going up. Like, nobody can debate that, and they've reduced the complexity into a meme, and sometimes that's all that you need in order to work that out. Right now, the Fed is scratching their head, right? Because they're saying, why do we have so many? Why do we have a labor shortage as well as high number of unemployed people? I'm trying to get the terms right. Like, they don't know what to do with those two things, because when you go to school, you either have a labor shortage, meaning like we're pretty close to full employment, or you have unemployment, in which case you don't have labor. Right now, it's like this coronavirus changed the names of the game. So now economists are writing the new rules and saying, well, if coronavirus happens, then you can have both people that are unemployed as well as labor shortage.
So right now, like, Fed economists know pretty much the same as someone in the WallStreetBets subreddit.
Yeah, they're guessing. They're figuring it out. They're like, well, they got these levers they can pull. They can print, right? And then they can talk, and that always seems to do stuff. I don't know all the tools they have available to them, but yeah, they're guessing. Just they might as well make a meme and then hope that fixes the economy.
I love it. Okay, so you started this subreddit in 2012. How many people joined initially? How did it progress from there?
You can see the stats somewhere. Like, there's a bunch of websites that track them. I don't remember off the top of my head. But when I registered the forum in like January, but I didn't announce it, right? Like I spent a few months thinking about it and designing it and changing the colors and making the logo and doing whatever. And then like 6 months later, I finally announced it for the first time.
Where did you announce it?
I don't remember. Like I'm sure I went to all the relevant investing finance type stuff. So I guarantee I must have gone to investing and finance and trading and options. I don't know. I can't remember. Algo trading, Forex. There's a bunch
of like Reddit investment.
So I go there and I say, hey guys, like, I just started this one. This celebrates risk. You guys can come over here. Girls can come here and hang out. And so we had, I don't know, a few hundred within the first couple days or weeks, and then probably a couple thousand by the end of that year. And then, started doubling in size every year, at least, as the years progressed. The next thing you know, we're at like 200,000, 500,000, a million, 2 million. Like it just, when you start doubling things, they really accelerate pretty quickly.
And so what were the initial conversations about? Was it always about, like betting on different stocks and like talking about like what those stocks were doing?
It was the conversations where you have a group of people that were like-minded like me. We're not risk averse. We want to take chances. We want to try and make money. And then you have people that kind of know what they're doing, right? So a lot of industry insiders or people, professionals that do day trading. Like it's a boring job. Even if you're a successful day trader, you sit in front of your computer and you look at the charts all day and wait for your whatever, pattern or trigger, whatever your rules are. And then, so they would come in and they would hang out. They're like, these guys are crazy. They just bet so much on earnings with a really poorly selected stock option that's most likely going to go to zero, even if they're right. And so the conversations were, let's talk about this particular stock. Let's talk about these particular options or these option strategies. Like they'd say, oh, this particular pharmaceutical company is going to release their phase, who knows what clinical trials. And the best way, because it's going to go up, instead of buying the shares or whatever, it's to sell puts, naked puts. And so why? Oh, because if this happens, then that happens. And then we'd all go in there and, sometimes make money and sometimes lose money. And that continued. And as the subreddit started growing, you start having some really creative people that know what they're doing, and they find inefficiencies that they could exploit, right? And even if they were short term. And that's what everyone calls edge, right? This edge, unlike being this big hedge fund that I have a lot of money and that's my edge, or I have a co-located HFT farm or whatever. It's, hey, I just realized my broker's letting me do something that they probably didn't mean to let me do. And they'd share it. And then a lot of people would do that. And then the broker would close that particular bug or whatever, oversight. And then constantly on the lookout for the next one.
How coordinated were these investments? Because we'll obviously get to GameStop, but in kind of the early days and the first couple of years, were there other instances where the group coordinated to invest or short or do something?
No, I didn't even think GameStop started as a let's coordinate thing. It turned into that, and now it's a thing, right? What we saw prior to GameStop, and even up until GameStop, were people saying, I have this idea. I think that Netflix is going to do something because of the thing and the Viacom rule with the new legislation and whatever. And they spill out this concept, or sometimes less sophisticated, put it out there. If these ideas were convincing, they would have a lot of people that would probably join those trades as well. Or if you'd have a particular trader that had a high profile winning streak, and then this trader continued to post their trades, they would get a lot of coattailers that would also try and follow suit. The language around it wasn't, hey, let's do a short squeeze, let's coordinate around this thing. Because up until GameStop, the numbers weren't there. Even if they all coordinated, the strategy of let's push up the stock price would have been an ineffective one. So it would have been more, let's coordinate because I like your idea, you've convinced me, and now I want to do that too. So that's probably everything that you saw right up until. And now you saw GameStop, that was more technical than just a sheer numbers thing, right? Like the same number, had they picked a different stock for that short squeeze or maneuver, they would not have pulled it off. So it was more technical than just lots of buyers. Yeah. But now the subreddit has grown, to 10 million people. But now there's multiple subreddits that are also extremely big. There's also multiple outlets on social media like Telegram and Discord and Instagram and TikTok and whatever. And so now you have this mentality of WallStreetBets. It's omnipresent. It's kind of everywhere. And now the numbers are genuinely big, right? Now we're talking about lots of people, and having that quantity of people now allows that question of saying, hey, the questions of coordinating trades now becomes more relevant than it had been in the past.
So you left or you stopped being involved directly with the subreddit, right? Mid or beginning of last year. Why did that happen? From what I've read, I understand there was like a problem with the moderators of the subreddit. So what happened there?
Yeah, there was a problem between me and some of the other moderators on that subreddit. And then that resulted in them, accusing me of having profited from the subreddit I wrote a book that I released in early 2020, and I was in the midst of creating this kind of a trading competition that's kind of an esports style event in Las Vegas and all these things. Eventually coronavirus stopped me from it, but that rift between us then led them to push me out for selling my book and for trying to create this trading competition. Ever since then, they've continued the subreddit the way that it was always run, and in the interim, I've continued to do what I do outside of the subreddit.
Why were they opposed to you doing this trading competition?
It doesn't make sense, right? No, it doesn't make sense because there's more to the story that I'm not allowed to tell you. I ended up selling the rights to that story to a movie studio. And once they release the documentary, movie, whatever, once that's out, then I'm allowed to talk about the inside rift. But the accusation that they used, right, because of this inside rift, they go to Reddit and they say, Reddit, this guy broke the rules because he's trying to make a trading competition and he's going to make money from it. And so then Reddit goes, okay, well, that's against the rules. And they removed me from the subreddit. So making this trading competition or even writing the book doesn't really make sense, considering that those moderators also profit from the subreddit currently by selling T-shirts. If you go to the subreddit, there's like a merchandise store. So yeah, it is what it is.
Okay, but the Reddit rules are that you can't profit from a subreddit, and they determined that you writing your book and doing this trading competition broke those rules. So no,
I don't actually know. So like Reddit never told me anything. They just said you've been removed for violating their terms of services. I then go and I read the terms of services, and the rule specifically says you are not allowed to be paid to moderate. And so that must have been that's the closest clause that I could find in the terms. And if that's the case, then that's what they considered. They never responded. I tried, emailing him and talking to various people that knew people, and it's just no communication. So I actually don't know what their reasoning was, and I don't think I ever will. It's unclear because there's subreddits like Coca-Cola or Under Armour, like brands that go out there and promote it, and clearly they're used to make money. I see tons of like cryptocurrency projects or NFT projects that go and they run to Reddit and they create the subreddit with the intention of creating the community and profiting from it. And so it's really unclear. It's murky how those rules are set up. But to be frank, I'm pretty much over it, and no longer dwelling about it.
Okay. How did you and the moderators initially meet? do you know them, or did they like become moderators organically because of how they participated in the group?
Yeah, they became moderators organic. I didn't know any of the moderators in real life, right? I by myself, I started this subreddit, and then early joiners, we ended up chatting in this chat room, and so we got to know each other better. We're like, oh, you guys should all be moderators and do what you want with it. And then they turned around and they got more moderators, and then I was pretty laid back with letting the community decide how to move things forward. And so I got to know some of them better than other ones, but they were all they were all people that I met, or in some cases, physically met in person, in other cases just virtually on the subreddit.
Okay, and then one last question on the mod, and I'll move on, I promise. But I read something about hate speech, and that was part of why there was a rift there. Is that correct? True?
Yeah, that was that was a strong reason why the rift began.
Okay, you were pushing against hate speech on the subreddit.
Well, yeah, I mean, like I'm getting into what I'm limited, but yeah, I mean that what the information that you publicly found is accurate, right? There was an issue with hate speech and sometimes in the words of speech and sometimes in different forms. And I had an issue with that. WallStreetBets is like a very crude, unapologetic, unfiltered, offensive, rugged place. And it's really tricky to define where the difference is between free speech and hate speech. And so we had throughout the years a lot of words that were incredibly offensive, right? That they were offensive to all sorts of people, right? And you can go back, and it was always uncomfortable for me to have these offensive words on there, but I noticed that these words migrated through time, and so there would be like, okay, now we're going to pick on short people. Now we're going to pick on, people with certain, whatever. They would end up picking something that would be offensive, they would move on. And so that's when I noticed, okay, there's not really personal, it's endearment, but it was never hateful, right? But when it comes to hate speech, right? I'm talking like the white supremacy, that concept, like that's really easy to draw the line and say, no, this is not in good faith. You're not trying to just joke around, hey, pal, this is something that we shouldn't have here.
No, I mean, yeah, that's definitely a shame to hear. So you there was this rift, and you got banned from your own subreddit that you created and saw grow into, were there already into the millions, the members of the subreddit when you left? So you saw it grow into millions, and then you were kicked out.
Correct. I mean, it hurt. That's for sure. Right? I'm like, especially once you get to hear the actual backstory. Like I suppose if I'd done something purposely bad, or I say like, I think I'm going to actually try to do a scam. Like I'm going to try and sell lottery tickets that I'm not going to pay out a lottery prize to, right? And I'm going to make millions of dollars doing this, and it's going to be risky. I might get kicked out of Reddit. I might go to jail, but I know that I'm doing this, and then I get caught. Then I'd be like, well, that sucks, but I knew it, right? In this particular case, it was like I was trying to do the right thing. And these accusations made no sense. And then they went above and beyond to say, they started making things up about me. And I'm like, this is frustrating. Why can't I have a say in this? Why can't I hear back from Reddit to hear the other side, or to let them know? And after a couple of weeks of mourning, I'm like, all right, well, it's done and there's nothing I can do about it. So I'm going to continue to innovate, and I'm going to continue to I created this thing once. I can continue to create again, right? Like I consider myself an innovator and a thought leader. That's why I did write a book, right? I did do these things. The moderators that took it over, their claim to fame is they took something over that somebody else made, right? and you're unlikely to ever see their faces also because of, the things that I know. So they can't even go out on interviews or whatever. Like their hands are tied. So they're pretty much stuck there forever. And they're pretty much got their fingers crossed that Reddit never goes the route of some of these MySpace routes that moves on, because they'll be left with nothing. Whereas I'm like, all right, I'm over it. I'm going to continue to do great things. And that's what I'm focused on now.
Cool. When does the movie come out, or documentary is it?
Documentary should be out next year. I mean, it will be out next year. They're continuing to film right now, but they've already also started the post-production for it. So,
cool. Where will it be streamed, or do you have?
I don't know. Like, I'm not super hands-on with this. I'm aware of what they're doing. Obviously, I'm aware every time that they're filming things. I end up traveling all the time for that to happen. That's and cool. but I don't, I have enough things to worry about that I just kind of check in with them. It's like, hey, so any news? When's it coming out? So, but look, it's a huge movie studio that bought this thing out. They have a huge team that know what they're doing, and whatever strategies they deploy for releasing this thing is up to them.
Nice. Yeah, I can't wait to see that. Okay. And then on GameStop, I'd love to just hear how that was like for you, seeing that, with all the backstory that had happened, that by that point you had left the subreddit for a few months, and then suddenly, WallStreetBets is everywhere. It's, Bloomberg, CNBC, everyone is talking about it, and they are moving markets, and they did this huge, short squeeze on GameStop and AMC. And like I said, in the intro, like really messed with the biggest hedge funds. That was incredible to see from kind of the crypto community side. It was so much of like the ethos of crypto, just individuals coordinating and taking control, and just like this counterculture, rebellious movement of like the little guy versus the institutions. It felt very crypto. So we covered it in the Defiant, and it was just exciting to see. How did you live it?
I mean, I'll start by saying that there is a really similar between crypto and WallStreetBets. There always has been, right? Dating back to the language around when Bitcoin first started, like it was this whole, hey, let's empower the individuals, right? Mm-hmm. Sometimes it's a little more activist on the crypto side, like, oh, the fiat and the man and central banks and send them to whatever. But that definitely a shared kind of philosophy, which is why right now I'm trying to merge those two. But look, it was interesting to watch. It was fun. It was definitely fun to watch. Like I didn't necessarily feel bad that I wasn't a moderator anymore, because I wouldn't have done anything if I was a moderator. Like these things happen outside of the moderator's control. Like the Roaring Kitty or Deep effing Value, he wasn't a moderator either, and it wouldn't have mattered, because the community's always been what creates these things. And so I'm super happy with the community. I have nothing against the community. So I was super proud when this thing is happening. I'm like, wow, here they go again, right? But they'd already done these things in the past. So I had this wording. We were on the cover of Business Week magazine in February or March of 2020. So almost like a year before that. And that was very specifically because they're saying Reddit, the subreddit, WallStreetBets is moving the stock markets, right? And it was more technical, and it was very geared towards the finance readers. This was a Bloomberg publication. We had people on CNBC talking about these things before, and Market Watch, Wall Street Journal, but seldom did you see this thing spill out into TMZ as this did. So thankfully I kind of had some preparation, because obviously I got a lot of media requests when that was happening. But it was really cool to watch because it outperformed my expectations. I would have guessed that it was that this short squeeze was going to go on for a little bit. The stock was going to double or triple, and then they'd move on to something else, the way they'd done that many times before. I could not believe how the thing just kept growing and growing and growing, and more attention just made this thing even bigger. So it was pretty surreal. And I think the most surreal moment was when I saw that the White House press, the morning briefing thing, some journalist was saying, hey, Mr. Press Secretary, what do you think about what these kids are doing with the stock market? They didn't say Wall Street Bets, but she stopped one word short of saying that. It was clear that she might have mentioned GameStop. I don't remember, but that was wow, the White House was just asked about Wall Street Bets. Did not see that one coming.
So, okay, so you felt proud. Was that kind of the main feeling at the time?
Yeah, because there's this philosophy, this ethos of empowering the individual. Look, when I started Wall Street Bets, I was looking to make money, right? But the reason why I called this thing Wall Street Bets, and the reason that I created the culture around it that I did, was because I realized that there was a lot of problems with Wall Street that went unsolved in 2008, right? And I wasn't thinking that this was going to be an Occupy Wall Street thing at all, by any stretch of the imagination. I never did, right? It kind of turned into that with GameStop, but it was more, why does Wall Street allow me, Jaime, a guy that doesn't know anything about the stock, to buy leveraged synthetic ETFs, right? These things are complicated derivatives with a lot of implications. And I would read about them. And the more I read about them, the more angry I would get as to why these things exist and why they serve no productive reason for society. And so it was with that negative energy towards the system that clearly has gotten away from its original purpose that I said, oh, you know what? No one's going to read this thing that I just wrote, this angry blog post. Instead, I'm going to channel that into Wall Street Bets and say, well, they let us use these 3x leveraged ETFs. Let's see how much we can use to break them. Fast forward a few years, and here you have this guy, Irony Man, doing these crazy box spread maneuver on stock options on top of a leveraged VIX ETF, like a volatile. I mean, it was really complicated, really crazy stuff. But he took that initial idea of this share of an ETF is a bad thing because of these leveraged derivatives that all these counterparty, all these things associated with it. And here's this other guy goes, wow, I could just push this button over and over and over and then take $5,000 and create a repeat this trade an infinite number of times that I wouldn't be able to explain to somebody that's not in finance because it is so crazy, on top of these leveraged ETFs on the VIX of all things. That was fascinating. It's because you can do it. Let's do it. Now I want someone to be outraged on TV and say, why is this guy doing this crazy maneuver on these crazy derivatives that I can't even explain? And at one point, I think Jim Cramer did go on TV and say, well, these kids on Reddit are playing with the VIX. They want to buy a yacht and they don't understand. So anytime that I would see that, I would be happy that this community was challenging the system, but not by complaining about it, but by kind of breaking it, right?
and using it and profiting from it.
Correct.
I think
can't beat them, join them.
Yeah. No, I think that was super empowering to see. So, okay. So now, what are you doing now? How did that interest in stocks and investing and your involvement with Wall Street Bets, how did that lead to crypto?
So I'd been following Bitcoin since its inception. I'm pretty sure I created a wallet and I farmed and whatever, and I lost interest in it. So super early on, it was just too cumbersome to use. But I followed it, and I liked the concept behind it, and I said, okay, well, it's cryptocurrency thing. I hope they can make it because it's really well thought out from the economic standpoint as well as the technology standpoint. Too bad you can't buy it on your broker. At the time, very far away from being able to do that. So I'll just kind of watch it on the sidelines. I'll go back to my stock options that I really like. And then I never went back to revisit that. After that, it was a coin that would go up, a thing that some people had and some people wanted. And then when those two groups came together, they decided on a price, and that price would go up or down based off of which group was bigger. And that was just less interesting, right? And the spreads were really big, and the time and the execution was whatever. But as a concept, I lost interest. I made a mistake by not reevaluating that understanding of crypto until this year. I just thought, oh, now there's more coins. There's this coin and that coin and Bitcoins and little coins and, crappy coins, whatever, Doge coins. I realized that there is this whole ecosystem that I don't believe, the word DeFi does not really do it justice, but it's close enough. There is a tremendous amount of power that I did not understand. And I want to emphasize that I'm not talking about a cryptocurrency. I'm not talking about a coin. Those are cool too, right? Don't get me wrong. I'm fine with that, just like I am fine with shares or equities. I no longer think there's a difference between the two. Both of them are equally. But I'm talking about the blockchain technology and the way that they've already today, not in theory, but in practice, applied to DeFi. And so I came across this and this project came across my radar. And I said, well, there's crypto world and there is, TradeFi or Wall Street world. Why not combine these things? They're clearly going in the same direction. You're seeing spillover where, tokenized stocks and Bitcoin futures trading on the CBOE and, the ETFs that they keep trying to apply for the Bitcoin they'll eventually get. These things, the lines are blurring already. Let's get ahead of this and let's try and create an ecosystem that actually combines the best of both worlds, because some of the tools available in DeFi are mind-blowing, right? Like rewinding back to this very symbolic leveraged ETF moment I had nearly 10 years ago. One of the issues that I had with these things was a concept called volatility decay. This is like a nasty side effect that makes these things go to zero with close to 100% certainty, right? Over time. So I understood this. I understood the math behind it. I understood the whole reason for it. I understood the risks. And then eventually I used them and not used them. But it was kind of a crappy side effect of these things that they all go to zero. I bumped into some the other couple of weeks ago on Binance where they say, we have leveraged Bitcoin ETFs, but they're special. And I'm like, why? Because they're variable leveraged ETF. And without getting into the specifics to bore you, they pretty much fix that side effect. It doesn't go to zero anymore. If it does, it'll take like hundreds or thousands of years. Somebody smart was like, why don't we make this thing and we change it so that when conditions are making this thing lose value, we use a smart contract, and then when the conditions are prime for this thing making money, let's change the settings again. So now you optimize this thing. I was like, why doesn't that exist in NASDAQ? And so 24-hour day trading is so important for not the gambler that's at 3 a.m, but for the system, right? It's Sunday and Evergrande says we're going to default. And there's nothing open, no futures, no anything. And you wake up Monday morning and all of your stops have been blown out. They've gapped over your stops. So your risk profile for your responsible hedge fund is completely out of whack because you were supposed to lose a maximum of 2%. And this thing gapped on you 10%. And now you have to sell other things. And the whole thing collapses. 24-hour day trading is the most fundamentally easy thing. It's like a setting on NASDAQ. They can just get the computer programmer guy that says office hours equals this time to this time, 24/7, and they're done with it. And so that's the reason why I think that DeFi needs to start coexisting with TradeFi, and they can learn from each other because DeFi also has some shortcomings that it could still improve. So why not marry the two things? And that's what I'm doing.
And I mean, just to expand on that point about how, broken traditional finance is, and just marry it with WallStreetBets and GameStop, because that also underlined how badly the system works when Robinhood couldn't process all the orders that were coming in for GameStop and AMC, which has never happened in DeFi with all its problems with gas and Ethereum being congested and all the different smart contract bugs and failures. But at least you can trust the smart contract to execute. It will never lock you out of the market when you need to buy and sell. If you're dealing with DeFi and not with centralized like CeFi exchanges, which those do collapse in the same way that Robinhood did. I just thought that was such an interesting point to come out of the whole GameStop WallStreetBets saga.
Look, there's, I agree wholeheartedly, right? Like we got to expose more cracks in the system. And I'll go out of the way by saying, the issue with Robinhood in that case was a regulatory issue. It was not a broker issue. All brokers had to stop trading. Robinhood got the bad reputation because they were the biggest broker for GameStop, and so, but it was a government regulation issue that deals with this like counterparty risk and clearinghouses and settlement product. Like, it's complicated. It's too long to put in a tweet, so people just assumed it was Robinhood. But you're right. The problem was exposed, and that particular problem does not exist in DeFi, right? But that's why there's some best practices that can be taken from a lot of places, right? Like somebody the other day said to me, well, the cool thing about NFTs is like your house can burn down and then you're not going to lose your Picasso. And I'm like, yeah, that's correct. But you can lose your keys. Right. Or, you wrote them down and somebody steals them or puts a gun to your head. Like, yeah. But your house at least doesn't burn down. And I'm like, correct. So you're taking one type of risk and known risk, such as fires, and swapping it for a different type of known risk, such as forgetting where I put my password, or being sloppy with it. That said, once you're able to identify these risks, right, like DeFi has different challenges that it has built into them, but they're constantly improving it. And the number of people that are behind this, I think project is an understatement. This ecosystem is tremendous. And so there's this constant improvement, and the open source nature of this makes it so that the contributions from everybody, all right, this crowdsourced, open sourced, whatever approach that has led us to things like Wikipedia and just an endless number of, like GitHub and whatever, a million open source and crowdsourced projects that are great. There's good things. Now there's good things about centralized exchanges too, right? Like you're using DeFi, you get a different market making structure, right? And so maybe you're not going to risk your exchange going down, but you're trading that for a specific trading strategy, such as using limit orders, right, for buying things. Like you give that up in exchange for the stability behind it. So it's never black and white. Like it's a nuanced topic, but what is black and white is things have a lot of room to improvement. And I think that DeFi has a lot of things better than TradeFi, right? Like the Wall Street. Like there's a lot of things that have been improved. There are now more benefits. I see more benefits on the blockchain than I do on the NASDAQ. And I don't think that we want to replace NASDAQ or New York Stock Exchange or whatever. I don't think we ever will, much like Bitcoin will never replace the Fed. But they can coexist and they can learn from each other and they can mutually make themselves better, right? And so that people can have choices and do what they want and do it best as possible.
So how does your project combine the two? Is that what it's trying to do? Like take the best of TradFi and take the best of DeFi and make something with that?
And adding a touch of community into it, right? It's one of the things about WallStreetBets. Even before GameStop, it was known academically that the stock picks on WallStreetBets, even before they were pushing prices and short squeezing, that the collective intelligence that we're able to select and filter out the winning stocks were better than the indices. In other words, WallStreetBets was already beating the market before they were pushing prices up. That's a component that this has too. And so what it is that we're doing is we have this DApp, right? This decentralized organization, or just decentralized application. People can purchase part of this organization. They can decide to create ETPs, which are like ETFs, and they say let's combine stocks. Like let's put Apple and Bitcoin and gold, whatever asset classes you can imagine. Decide on the weight, put it up on blockchain, and just let people buy it anywhere. Like that's one strong approach, this collaborative approach. You have single assets, so people can go on the blockchain. Right now, we've already offering synthetic. We're calling them stonks, right? Because they're not actual stocks; they're synthetic assets that track the prices. So, which have the benefits of 24-hour a day plus no borders, no KYC, whatever. So anyone at any time can go in there and buy shares of Tesla or fractions of a share through the blockchain, and then this thing is going to behave the same way that Tesla is. We're pretty close to rolling out tokenized stocks. This is the type where you buy the same thing, not 24/7, 20 hours a day, 7 days a week. But now this thing is going to actually have the underlying shares associated, along with the dividends and the voting rights and all these things. So once again, all on the blockchain. We just released, if we're released, I don't know if we've announced it yet, but this macro hedge ETP, which is kind of the opposite of YOLO, right? It's this kind of a stable coin concept, but or this currency that's more stable than any one particular type of other currency, and it's got a lot of great things built in. And so but a lot of this is coming from the community, right? Like this is, what do you guys want to do? And then people that own this thing can then help shape it. Money from all these things, like all these things I mentioned and whatever else people come up with, it's going to have fees associated that get rolled up into the treasury for this organization. And then the community says, oh, look, we have $100,000. What should we do? Buy a billboard, a Super Bowl ad, give ourselves a special dividend, burn coins, whatever, buying crypto punks. And so people come up with it. And this thing is just by the community, and it's for the community. And now it's expanded outside of just the US, right? This thing has gone international.
Okay, so it's a community of people who are able to select different assets that they want to form a fund, which you tokenize and then put on decentralized exchanges. So
or
that's
centralized
one part.
Exchanges.
Or centralized exchanges. Okay, so what do you use to make those funds?
So we have partners based off of different technologies. Instead of reinventing the wheel, there's been a lot of organizations that have dedicated a lot of time and effort and specialized in doing these things. And so for the ETPs specifically, we're working with Balancer. And that's the announcement that's going to be made next week. I hesitate to tell you the date, but that's with them. They're the ones that's the technology that powers those ETPs. And for the tokenized stocks or the stonks, we're using Terra/Mirror.
Oh, yeah, I was going to ask you about that. Mm-hmm. Okay, so these will be, how are they different from the synthetic assets on Mirror itself?
So these, the ones that we're currently offering are very similar to the ones that are on Mirror. Difference being is, we're trying to give additional variation for purchasing, flexibility, right, as far as which currencies you're able to use to trade with, and the fees associated with trades on this platform go to the dApp itself, right? So at the end of the day, the user experience might be similar. The benefit to the organization is higher if they utilized this platform. That's with Mir, right? But once we announce this next one whenever we're ready to announce it, that's with a different organization. That one is going to be different in that, and I don't know of another company. Maybe they do it. I know that Binance tried to do this in Germany, whatever. But this thing is actually going to purchase the stocks, right? So you will have collateral.
Okay, on the stonks piece, is your like WallStreetBets dApp like a front end to offer Mirror synthetics? You
could say that, yeah. Okay,
got it. And then the difference is that fees paid to that front end then go to a DAO that WallStreetBets token holders control.
That's 100% right.
Okay, cool. And then the third piece is these other tokenized stocks that are actually backed by the stocks itself. Like, okay, and where are those stocks custodied?
So all those details will be released when we're ready to release. Like if I start giving you specifics, then people are going to try and guess who we're working with, and then it just makes things complicated. But the details, as with everything we've done, have been full transparency with with full information to give people the confidence that these things are done correctly. But once we're able to announce, what I am comfortable with saying is this will allow people to purchase an asset, a blockchain-based asset, which is collateralized by an actual share that was purchased somewhere. And if a lot of people buy this particular stock on the blockchain, it will potentially, depending on the profile of this thing, have an impact on the price. Unlike the synthetic ones, which is just almost like a prediction market, this thing is actually going to have an effect on the underlying, which is a very important, to me, it was one of the most important prerequisites of joining this project.
Very cool. Okay, so, right, because like if people buy this tokenized stock, you'll have to go and buy the actual stock.
Correct.
To match the number of people who are buying the token.
That's right.
And why have both? Like, why have the collateral, like crypto synthetic?
I'm not. Once we have this one, like we rolled out the first one because we wanted to offer it. We said we were going to, and we did. And I was glad that we did that one, but I was still unsatisfied because I didn't, for me, it's not even about short squeezing or whatever. For me, it's more like the efficiency of the market. Like I want to fix it. I want to make it better. I want to make it more efficient, and I want to empower individuals. And that simple mechanic of purchasing the underlying shares is black and white difference for the individual that has the two choices. Like, I don't know, they both go up and down by the same amount. I don't care. That's fine. But to me, having more participants that actually having touch points with the stock market, that means that the liquidity for that particular asset is going to increase, which is going to make the price discovery process a lot more efficient, which in turn then becomes an economically productive activity for the financial markets, which is one of, that's the reason why insider trading is against the law, is because it doesn't contribute anything, right? Like neither does synthetic stocks, although it does have this productive purpose in that, well, whatever, I won't get into the technicals, but this other one is important to me. So once we release that, it's unclear if we're going to keep the other one or not. The benefits that the other one has is it does trade slightly more hours, right? That's 4 hours more per day. And those 4 hours can be used for arbitrage purposes. So if during those 4 hours, the CEO of whatever dies, then you can short this thing, or, they announce whatever, you can buy it. And then there's a short-term profit opportunity that can pop up. I like arbitrage opportunities. Those are another insanely productive activity for any given market. So it'd be cool to keep that efficiency up there. It's also the borderless without KYC. We're obviously going to have to comply with regulatory agencies for this stock, this collateralized version of it. And so that's going to imply there is a KYC component to it, which these stonks don't have. So there's slightly
that's
less
a big
friction.
difference.
Yeah.
Yeah. Okay. Makes sense. How is the mirror stocks and the funds, are these pieces already live? Like, can you go on the WallStreetBets tab and already start?
You can see the stonks; those are there already, right? The synthetic ones are already there. The ETP. I don't know when you're airing this. If you're airing it today, then I can say they're live. We just haven't given people the link to it. If you're releasing this next week, then we'll be pretty close to being live.
Okay.
It's up there. And next week is when you'll see news about it. And so that's already going to be there as well. We've already done several rounds of voting for different things for the governments, to be able to use their voice through their tokens. And so that's there as well.
Where's the community organizing?
On the internet.
But like Discord, Telegram.
There's multiple touch points. Like, so Telegram's a big group. There's like over 100,000 people in there. We just opened a Discord a couple of weeks ago that we're still growing. So it's got a few thousand people in there. It's interesting how people are so loyal to whatever platform they like to use. And so, basically trying to attract the people that don't like Telegram but do like Discord. And so We have multiple social media channels, the YouTubes and the Twitters. I have my Twitter handle and Instagram accounts, and it's all over the place, right? That's why I said the internet jokingly, but there's a couple of hubs. The two big hubs at this point are Telegram as well as the Discord.
And where is voting happening? Like, is it on chain?
Yeah, it's all on chain, and it's through, if you go to WSBDApp.com or easier, WallStreetBets.net, it takes you to the same place. There, you're able to do, there's also a place to organize there too, by the way. There's a forum where people can post and vote and, comment and typical forum. But the voting takes place through our website on chain.
Okay. And so there's like already, like the WallStreetBets token has already been distributed to your community?
Yeah, we distributed this token, forget it was like April or May, but the coin wasn't anything. It was like, you have all these projects that go out there and say, we're going to conquer the world, just buy this thing quickly. FOMO, right? Like, we launched with similar kind of a concept because we didn't have anything. And so people were able to buy them and do these liquidity farming and, pancake swap and do all these things, which I didn't really know about or understand back then. Now I do, but there was still no utility behind it. We're just now starting to roll out all the functionality, right? So we're just now starting to pack this coin with the intrinsic value, right? Keep in mind, all of these things all of these products that we release, all of them have deflationary measures built into them. So in part, it's, yes, put money in the treasury, which gives these token holders intrinsic value to whatever they're holding. But there's also a component that buys and burns tokens. I forget all these different components into it. And so now all of a sudden we're able to go out there and do the same kind of approach because now we're functioning, right? We do what we said we were going to do. It's no longer just broken promises, not broken, but it's no longer just empty promises. Now they're ready to go. And so as far as I am concerned, we're just now launching. As far as the crypto community's mentality, which is not the same as mine, this thing launched back in April.
But do you now is the time that the token actually has real utility?
Yeah, so at first it's speculation or farming or whatever, and some participation. Now we're unleashing all sorts of functionality, right? And to kind of celebrate this progress that we're doing, we just announced an NFT that is going to enhance, well, first attract the NFT audience that likes NFTs, right? That's a whole kind of separate topic and submarket. But to tie it into what we're doing, this is going to be an NFT with all the artwork and attributes and properties, but also it's going to have utility on the WSB dApp experience, such as higher utility yields, higher farming yields, such as exclusive access to certain virtual events or in-person events, and access to a free unstoppable domain, like all the .cryptos and I forget coin and whatever.
.eth or
.eth is not on there. I think.
No. Yeah.
It's all the other ones. .nft, that's a good one. So I don't know, so we just announced this as well. People can find that at wsbcollectibles.io. And now all of a sudden we're excited. At least I'm super excited, right? You have this marriage between crypto and TradeFi, which is where my background is from. And then TradeFi, it's like, all right, well, it's not just this kind of FOMO, let's get everyone excited and get a few thousand people to pump the price up and then just walk away to go to the next one and try to get rich quickly. For me, it's like, no, let's actually create this cool, intrinsic, valuable, meaningful experience for people that is actually going to have substance behind it. And so they launched this coin, and I would go out and talk about it, but it was so hard because I'd be like, yeah, we're going to do great things, I hope. Now it's so much easier because it's like, yeah, sorry guys, we haven't been focusing on, doing the typical, let's do a Telegram giveaway, whatever, these spammy messages that you see. And instead we've been focusing on building up these really incredible partnerships and technologies and doing these things. So now all of a sudden you ask me, I'm like, hell yeah, we're going to conquer the world because we're already well into the process.
Nice. Do you want this new community to evolve into something similar to what Wall Street Bets did?
Look, I learned very early on into Wall Street Bets that I don't know what's best for the community. Right? I sometimes think I do, and sometimes I'm right, but other times I'm wrong. Because, for example, I thought Robinhood was a bad idea because it was incompatible with my personal trading strategy. But I was very wrong, and I'm glad that I didn't apply my philosophy. I just force their hand and look. If people want Robinhood, let them have Robinhood. And it turns out I was wrong because there's a whole different strategy, which is based off of memes, where they don't care about the execution or whatever. They just literally want confetti, and that is empowering them to do whatever they do. So I've been humbled enough times to say, we'll see where this thing goes, right? If people want to try and mimic what's happening on Wall Street Bet subreddit, then that's great. If people want to try and carve out a new niche where now we're bridging DeFi with TradeFi, because there is a lot of power in TradeFi and there's a lot of power in DeFi, and we don't know what's going to happen when they're combined. So I don't pretend to know what's best. But I do pretend to have a lot of faith in the communities, and the collective intelligence and the power of groups is, orders of magnitude better than any one individual, including me.
Nice. Awesome. Well, Jaime, we've come to the end of the hour, and this has been so interesting. Thank you so much again for joining me. And yeah, I can't wait to see where the new Wall Street Bets DAO goes, and also can't wait to see your documentary.
Thank you so much. I'm looking forward to it. I really appreciate you having me on here.